Hello, hey. Where are you? Where'd you go, eh? Oh, for show. There you are. Good morning. Good morning. Come telephone. Hey, I just sent out a tweet. I said I want the oil market to fall. Boom. I'm that powerful. Hey, by the way, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Very nice to meet you. Thank you for being here at today's webinar. I will do a webinar like this morning and tomorrow and the next day and the next day and the next day. So please subscribe. That way when I click stream, you will be notified. And if you happen to be available and you would like to attend, you just say boom and it brings you right into the webinar. Cool. If you're benefiting from these webinars, if you're learning how to be a trader, if you're learning technical analysis, fundamental analysis, trader psychology, all this kind of stuff, and it's starting to positively impact your trading, please pay it back. These are free webinars, but free ain't free, right? So pay it back. Visit tradersway.com, open up a trade account. Go into your, once you're done that, go into your back office, download MT4. Then you can come back to this video. In the description, I give you all my chart templates and profiles absolutely for free. Cool. I mean, what a great relationship, but it's a symbiotic relationship. So we need each other. We need you to succeed. And if you succeed, Traders Way succeeds. That's how it should be. So anyways, like I said, I do these webinars every day, approximately 7:30 in the morning, Monday through Friday. Please get involved, ask questions. I typically cover dollar pairs and yen pairs and gold and oil and all that kind of stuff. But if you want me to cover something specific, we can talk about it. So anyways, thank you very much for being on my team. Cool. So let me move this over. Boop. 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 So one of the things we talked about last week, and particularly in the swing trading group, was we had a lot of trade plans based on technical analysis. And I said, well, the one sort of, I don't know, how do you say it? Not necessarily a risk. I mean, I guess it could be. The one unknown, I suppose, is whether China and the United States would put together some sort of agreement. And the agreement was not to punish each other, which is a very positive thing for the market. So there were a lot of things that were set up for a stock market fall. Not that it was going to fall, but if it was going to fall, it was going to be a good place for it to fall. So as a swing trader, there may have been an opportunity to look for that. The risk event or the unknown event is if the Americans and the Chinese come together and do something positive that's good for global macroeconomics, and that would more likely make the stock market rally, which has nothing to do with whatever your technical analysis is. So anyways, we did get that where no agreement for new terms were made, but no new tariffs were added, and that's a good thing. And I think Shanghai was up 6%. Say what? Right? Dumbass say what? Yeah, 6%. Holy moly, huh? That's good. Just in case you're not sure. That's good. Is that right, Chuck Duck? Yeah, he's been on vacation for a while, so welcome back, Thumb Downer. I must have said something bad in the first 4 minutes, huh? Whew. Ah, man, I need more coffee. All right. So that's that. And then check this out. I sent out a tweet earlier about 20 minutes ago, maybe half an hour ago, saying that I wanted oil to fall. And look at, yeah, Trump did the same, but I think it was my tweet, not his tweet. But anyways, check that out. Now here's the interesting thing. Okay, this is down because Trump sent out a tweet, right? But isn't it amazing that that's the exact price for bears on a weekly basis. That if you woke up Sunday afternoon and you're like, hey, I gotta set up my trades for the week, and you happen to be a bear on oil, that's the price you wanted to short. Amazing that it happened right at that price, huh? Pharaoh says, what did he say? He said oil is, he said something like, hey, OPEC, oil prices are too high, don't hurt the economy, or something like that. Blah, 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 blah. Okay. Chuck, I doubt that, Chuck. No, never in a million years. What are you talking about, Chuck? All right. So anyways, that's interesting, right? Something that can't be planned. Question is, do you believe it? Do you want it to stay there? Are you still a bull? Because, you know, if you're looking at role reversal kind of stuff, that's the area. So it doesn't mean it's over. In fact, technically, it's still bullish. Okay. So it could still do something like this, but don't be stubborn. Okay, because that the president of the United States calling for lower oil is not priced into your technical analysis. That's nowhere in there. Remember, technical analysis is just the pricing and the timing of the market. This is something new to the market, so that the market has to reprice. Okay. Now you might say, okay, great. Well, the president's calling for lower oil, but there's still the supply and demand fundamentals and whatever, and you believe it's going to work its way up. Good. Then just find your prices. In this case, I'm looking at role reversal, and wait and see if you get the respect that you were looking for as a bull. Okay. And that's that. Bears, if you miss the first move, then that's your second move. And you notice that everyone's kind of waiting for an exhaustion retracement, right? Is that right, Unethical? Nailed it, huh? You must have caught the swing. Oh, it might have been a private tweet. You guys are not in the private group? I forgot. Sorry. You're not in the private group. All right. Okay. Cool. And here's your gold. Okay. And I think it's warranted to stay with that idea for a while, right? Until it breaks. Okay. Now let me zoom in a little bit. What was the plan for the month? You see this area here in blue? That's the buy zone. You can see I even triple bottomed it for you. This is where bulls buy for the month of February. Okay. And their target was right here. We didn't quite hit it, but that might be close enough for the girls you go with, right? Okay. Now here was the retracement, which we talked about for days. We did have this potential off the 21, but bigger than that, more important than the moving averages, because not everyone uses the same moving averages or moving averages at all, but everyone's got the support. Not the dynamic support, the hardcore support, right? And then you take it to the next level where this week's swing, if you're a bull, because you might have been a bull here, you might have been a bull here, you might be a bull now, not using support and resistance of price, but using support and resistance of the market. this is a buy zone for this week. And people doing weekly swing trades on gold are actually targeting higher. So that's probably going to a month R2 if you're a bull. Okay? Right? Unethical says, yeah, good call last week. Yeah. Well, the part of the trade, though, that we talked about it hitting this and coming down. That's what we talked about a week ago or something. Coming down to this area. Okay. And that's, if you're a bull, it just sets it up for the next move. Well, now that's all come to fruition. We still don't know if it's going to work, but it did drop. And you know what? If you were stubborn, you paid the penalty here. That's a significant decline if you just held on because you're a bull. And yet, taking profit ain't a bad thing. And then you're down here and you're re-upping. That's cool. Okay, and that's the new target. And of course, if you're a bear, you're going to look for something like this and that. And that, what that does, okay, and by the way, that's fully justified, because if you hit this target, okay, if you get that type of price action early in the month, you're returning to this black line. The question is this early in the month? And it's slightly off center, but it's pretty close to center. So I'd say judgment call on whether you believe that that's early in the month. I would probably say not early in the month, right? Probably not early in the month in my judgment call, but not everyone has to agree with me, right? Because it's very subjective. If bears want to take it down, they want to take it down. But if you're a bull, that's definitely a buy. This is the threat to bulls. Therefore, that might be where the bears live. By the way, I got an email this morning from a Forex, I guess, education and training company today. And they're like, we have this new product, you got it. And you get there, and it's a 1 hour sales pitch. So I went skip. And I noticed they're like selling things like, this is where the banks sell. They're selling pressure. And I'm like, dude, and I think it was like pound dollar or something. Like, I totally recognized it. Like, wow, really? You're selling pivot points to people? This inside bankers information? They're selling pivot points. It's just like, wow, really? So anyways, I give you my pivot points for free. 249 bucks a month. I'll give you mine for free. There you go. So anyways, yeah, there's bank selling pressure. Like, oh my God. Whenever you hear nonsense like that, you should run. Like, if you only knew the inside information that only bankers know. That's so ridiculous. Wow, 250 bucks a month for pivot points, huh? It just reminds me of Forex Made Easy back in 2000, year 2000 or whatever it was, 2002. And they were selling people for, I think it was like $500 a month. And that's back before, people had charts. So it was software, and all it was MACD. People were paying $500 a month for MACD. So now you can pay 250 bucks a month for pivot points. But they don't draw the pivot points either. It looked like all they did was, on their charts they share with you, they're like, this is the selling pressure from banks. You're like, oh my God. So they're manually drawing them with their inside information. They're just manually drawing pivot points. It's really sad. Anyways, I look at this and we're still not really going anywhere. That gives me caution. You know, gives me caution. Oops. Wow, that was really messed up. Jimbo, when someone's selling you this, that's different. Okay? If you want someone to hold your hand and teach you how to trade, sure, someone's got to do it. But I'm not selling that. I'm giving it. You can download my stuff right now for free, Jimbo. But when someone packages it up like this is secret information, but now it's revealed because I have inside knowledge, and if you pay me money, I'll do this for you. I mean, no, come on, bro. That sucks, Jimbo. Okay, so anyways. Okay, so anyways, you could kind of draw it this way, I suppose. Eventually, maybe it'll trend up. I wanted to. I mean, I want U.S. dollar weakness because that's good for macroeconomics. But remember, overall, just mentally, I believe the market will kind of come up, and then it's going to come down, and then kind of set in the middle for the summer. Okay. Okay. Rather wait for the trend. USD kitty cat, has it been affected by oil dropping? Not on the 4-hour. Okay. Things that I look for, just as far as like the eyeball, what am I looking at? Well, I'm wondering about this. That's not today though, right? I'm looking at this monthly pivot. Okay, that is an MM2. Okay. I'm looking at this as it's Friday's target, last week's target. So here's last week's setup. Okay. No, Jimbo, you need the experience. Look, if we look at things like this and you have an M3 and you don't take it as a bear, me doing it for you is not going to be a learning experience. I mean, well, I don't know. You're not going to get better as a trader if I make all the decisions. People know what the trading strategies are. All of that is very basic. So people need to, the experience required to be a successful trader is seeing that you're here and then making the decision and then doing the trades and managing the risk, not having someone else do it for you. Okay. So the knowledge is what I share. You have to have your own experience. Okay. You have to have your own experience. There's no other way around it. Sometimes I feed you guys a little too much, I think. But you have to have the experience. It's all about the decision-making process. I think technical analysis after a while is actually fairly straightforward, especially when you filter everything with a bias. Okay? I want this pair to go down. Okay? Friday front running sets up a move here for this. Okay? And that's why I'm already thinking like, well, by the end of the week, if we kind of do this, there is a room for a change in direction. And then with the tweets, bringing CAD down is one thing, but also right now we have good global economic news, which also brings the dollar down. So I think it's holding steady with that. But the Chinese, the sort of the relationship between China and the United States right now is positive for global macroeconomics, which weakens the dollar. So this is a sideways play. I'm just wondering about, this area later in the week, this target, confirming that target. If that plays out, So I got to be careful. Like, you can't sell it here, right? But earlier, there was a trade, right? There was a trade. You could use pivot points for that. You can use, look, it's just price action, right? Okay. So the next one sort of in here, the danger is that this may be kind of a bottom. I don't know. I might have to reinvestigate that, and we'll have to see if oil recovers. Now, if oil recovers, yeah, straight shot. Here's the target, and then that's the price where I want to walk. But you see all of that? It's the decision-making process. Okay. Now, what if you're a bull? That's where the concern is. The concern is, would a bull consider this support? I think so. It's not the world's greatest, but it's definite. Okay, that's absolutely, by definition, because of the pivot point. Okay, and this was last week's target as well. So I think a bull is going to want to take it, and the bullish target is back to the top of the range, right? But that's where, okay, so like if you're down here, yeah, you're looking for some sort of setup. It's dangerous though, like I just showed you, because a bear is going to want to take it off of here. So that's where sort of the battle is going to be. A bull, hopefully if you're a bull, you get a bottom first, not just a touch. If you just buy it now, that's a gamble. So this is sort of a test of patience, which of course is important, right? Right. What's up, Zemo? Mayor? Cool, right? And you see sort of the market in general has indecision, right? Like, what kind of trend is this? It's sort of, it's kind of like that Kiwi dollar move, right? Like, to me, it looks sideways, generally, okay? It's definitely not up, 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 down, down, buy, up, 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 down, down, buy, right? It's sort of, it was down, then it was up, and then it was down. And so you got to be very cognizant of where the bottoms are and where your targets are. And if you're a bull, it's okay to start thinking like you'll either buy it here as a bull or you'll buy it here, right? So if you want to put it like plan A, plan B, that's okay. I wouldn't be too quick to judge as a bull. Like, I think even if you buy it here and it's support, you're definitely vulnerable for a one more down, right? And then maybe the following week is the move, which is fine. But it could be here, and so you kind of have to do your job. But as a bear, you're pretty late in the cycle for adding to new shorts, right? Like, bears should be sort of up here, right? Okay. So that's sort of, before you do anything, I suppose, you should ask yourself, what kind of market are you in? What is the sentiment of the market? Or is the market bullish? Is the market bearish? Is the market sideways? And a lot of these right now look more sideways than trending. Now, if all you're doing is shorter time frames, right, then that's fine. But you notice how this is up here. is more bearish than bullish because you wouldn't be buying at resistance. So in reverse down here is more bullish than bearish. But it's not quite bullish yet, but it's more bullish than bearish because it's more supportive than resistance, and a bear only sells at resistance, right? So for a bear, you're gonna look for here, right? And that's why we already have this marked a long time ago. So bears are like, well, maybe I'll take another shot here. Okay. And bulls are like, well, maybe if it double bottoms, right? So it's mediocre for both right now. So anyways, and then of course be cautious on the tweet. Who knows how things turn out. Now I would think improving global macroeconomics would improve demand for oil. We talked a lot about that last week. So, you know, this may be an artificial move. Great. Then let it fall. Look for your prices. Set it up. Be patient. Don't chase these prices. Right? The only one that's making money on this, or should be making money, is a bear that sold up here because of resistance. And remember, you're supposed to be trading in this time frame, right? That's where you do your swings. And that's the swing price. In that case, if you did what you're supposed to yesterday, then now you're getting paid. And you're like, good job, job well done. That's how you get paid. Right? And was that because you were a genius? No. Because you happen to be a bear, and that's a standard swing trade for bears. So you did your job, and this time you're rewarded not because you are a genius, because you're trading in the direction of your bias, and the market gave it to you. In this case, President Trump gave it to you, right? Right? And that's that. Trade your bias. Be consistent. Be consistent. Which one are we missing? Must have accidentally killed one. All right. So anyways, I'm looking for weak dollar. Ricardo, good job. Amazing. Amazing job. Now, most countries around the world would actually want oil to go up because they're trying to create inflation, you know, so, you know, so the Europeans are going to be punished for this. But anyways, we have a big, strongward downtrend. Remember, I want this to go up. Okay. So we go through this huge period of downness. Okay. Then bottom out near the target, on the target, on the target, on the target. Supportive, right? You see how it essentially creates a short-term consolidation? Okay. Okay. What if you're a bull now, because this brought you in, this bottom brought you in, what's significant about this move? Well, first of all, it's off of a bearish target. You may consider it a higher high, higher low scenario. But as a swing trader, this is your buy zone. And this was your target. Okay? But also now, because we're up here, now you have even more permission if you want to be a bull. That's definitely an area where you can be a bull. So how do you set that up? Well, you can see I've already done it. When you make a higher high, you look left, you look for old resistance, and now that becomes support. So you buy down here. This is price action. Then you go into the new week, in particular Sunday morning. Okay? On Sunday morning, no, sorry, not Sunday morning, Sunday afternoon, you're supposed to be setting up your swing trades for the week. Yes, you're supposed to have plans for the week. And a bull, this is your zone. This is plan A. This is plan B. You can see if you were at your charts when the market opened, you had the opportunity to be a bull, and your trade plan looks something like that. Do you know if it's going to work? No, it started out good. So where do you become vulnerable? Well, we know bears, okay? Bears live, actually, there's one here. This is a set of bears here. And right, the inside bankers, the secret sellers are in there. So, anyways, this is I was going to do monthly. Okay, that's the weekly M3, and this is a monthly in here. Okay, so this is not a good place to buy. At the very least, it's a bad place to buy. This was a great entry, and you can see there was even a Friday front run. And some bears are likely to live in this space. Faux show. Okay? But it's not a great place for them. It's not a great place. It's not, for example, bears don't get excited about that. Okay? Bears don't get excited about that because they're definitely vulnerable to the market going against them. And by the way, thank you for subscribing, guys. Appreciate that. Okay, so that a bear doesn't want that. Now, a bear would rather see sort of like that because it kills the uptrend. So if you were a bear, you know, another drop into here, and then maybe a here, and then maybe a there is better. Way better. Okay? Way better. So I'm hoping, as a bull, because remember, I don't like euro, but I want weak dollar. So as a bull, this seems to be tickety-boo. Okay? Because you do this all day long. This is plan A as a bull. In particular, yesterday afternoon. This is plan B for a bull, maybe later in the week. Okay? Now, I'm a lot less excited about this move if we come down here because it creates a double top lower low scenario. So that really kills it for me, right? So really there's only plan A or only plan A. Shakir, do you want me to send you naked pictures of me too? All right. So these are day swings. So I was messing around with this in the swing trading group. Yeah, Jimbo, yeah. Thank you, Jimbo. Jimbo's new. But some people are funny, like, I don't know. So I grew up in Canada. And you would just never ask a question like that. It's so impolite. I couldn't even imagine. So I don't know if it's just different cultures or if it's the internet or stuff, but people say very strange things. Right, the gold digger thing made me laugh. But you know, like you just don't, I don't know where I come from, you just don't say things like that. It's really interesting. All right. Yeah, that doesn't bother me, Jimbo. I don't have to prove anything to anybody. I'm not trading your money. All right. Where's my drawing tool? There we go. Oh, for what? For Aussie FX mod? Oh, on the euro. Okay, yeah, let me go back. I switched back. That was over here, I think. Okay. Okay. All right. There's the Sunday swing, right? Very similar to this one. Okay. So where do you put your stop? Well, the unfortunate side of this, or the part of this, no matter whether you enter plan A or plan B, your stop is the same. Okay. Right? So that's it. You're right below the S. Now the thing is, at some point you need to make the decision to move it. Now you can also move it based on, right? That's just the standard operating procedure. Then you can look at this and say, well, I have a weekly and a monthly here, so you could move it closer. Now, of course, by now you're already profitable, so you definitely should have moved it from here. Let's say at least this. Okay. And then the next big question is, when do you move it to break even? And typically I wait for the higher high. Because even if we come all the way back down here, it's still not technically bearish. Remember, these are swing trades. You're trying to trade with the trend. So your goal is to stay in it. You don't have to freak out. Don't have to worry about taking a loss because A, you're not over leveraged, and B, you got, a whole year to measure your success on. So what you can do is you just wait, because it could come back to here. Now, if it comes back to here, that is still technically still within reason over the course of the whole week, but very much less desirable, as I said, because it's made a lower low. So you could override that with your analysis and say you want to stay above here. So maybe you have even a smaller stop because you just don't want to even see this drop here, because you can always bounce back in, right? But typically, let's say typically, stop goes here, it starts to move favorably. I would have it at least here at this point. Okay, and then if it makes a higher high, then we get it to break even, and either way you're going to get out here, right? This entry predicts an R2, not an M4. Okay. Okay. Yeah, that's true, Jimmy. That's true. Oh, I'm so tired today too, so I feel like I could be cranky, but anyways. Yeah. I'm tired, man. Wow, I'm tired. Zombie out here. I didn't get enough coffee and all that kind of stuff. I feel like I'm going to have a sugar low as well. Beautiful day outside. Incredible. All right. All right. So did I answer the question? I'm sorry. I'm really I'm getting a sugar low here, so I might have to cut early. But whoever asked? Oh, yeah, yeah. I don't really care about win-reward ratios and stuff like that, right? I mean, I wouldn't risk 100 pips to make 10 pips, right? That to me is more of an issue of getting out. So sometimes, like here, ask yourself, I mean, your entry should be here. See, a lot of the problem is people enter their trades late and wrong and all this kind of stuff. But the standard trade here, the standard swing trade, right, this is a long. You might have entered long here. So like we talked here, you might have entered on the central, which, right, here. That's fine. So you might have entered here. But I said keep your stop below here, which would have, so that's here, which gives you this opportunity to stay in the trade. Okay, good. But the risk-reward ratio thing, I think, is more applicable in these situations. It's obvious there's resistance here on a monthly and a weekly basis. Okay? I would treat this as an M2, so that means the target's M4 on a weekly. But look at that monthly. What's the difference here? 8 pips or something? So when you make this move, you have to ask yourself, do you get out early or does it have to hit this pink area? And that's where the risk-reward ratio is like, I don't really care about the 8 pips, right? You got in on Tuesday. By Wednesday, you're 2 shakes of a lamb's tail away from your target, but it's clearly resistance. Should you hang on? Should you hang on to the extra 8 pips? I'm like, you know what? Look, got it, good enough, cut, move on to the next trade, right? Why is oil dropping? The secret, the secret traders of the secret banks. No, Trump sent a tweet. Trump sent a tweet. So check his Twitter account. Some people said they checked it and it's not there. Well, then he sent it to me personally. But anyways. Sure, trade, is using 1,001 leverage a bad thing? Well, I suppose it's more of an issue of your lot size relative to your account size. Okay? So does that have to be leverage? Well, even if you had 1,001 leverage, it's more like, I mean, what does that mean? You're trading a mini lot, but you only have 10 cents in your account? I mean, so I don't look at it as leverage per se, I guess is what I'm saying, right? So I used to have a standard operating procedure of 1 mini lot, right? I would trade 1 mini lot for every 100,000 US dollars in cash I had in my account. Okay? That was my standard operating procedure. And I think I was doing about $600 million a month in volume when I was doing that. Okay? So that was the rule, and it kept me from being over leveraged. Now you could have 1,001 leverage and still trade 1 mini lot per 100, right? You just wouldn't need the leverage, right? So I look at it more like lot size versus cash. Right, Roger. But I don't teach that, do I, Roger? I don't want you to be over leveraged. I want you to, right? What do I say every day? Focus on the long term. Never risk money you cannot afford to lose. Stay humble. Right? So like you can have 1,001 leverage, but don't use it. Okay? And then how do you build up bigger lot sizes and stuff, right? So like here's another thing. All right, so you have all this leverage, but let's say you trade 1 mini lot for every $10,000 in your account. Whatever. You enter one trade, you don't have a lot of percentage risk. That trade becomes profitable. So let's say you buy in here, okay, and you put your stop. And now it's profitable. So you enter a second trade. Now you got two trades, right? Another mini, but this one's profitable. So you're not using any leverage anymore, right? And then you go up here, and then now that one, so you enter a third one. So now you got two trades, right? But only one is using any sort of leverage. These ones are already at break even. And that's another way of, if you don't have a lot of money, why don't you focus on getting lots of profitable trades and then letting them run? Because we know a couple of things. One of the rules that I think of right away is you will never, ever, 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 ever significantly grow your trading account if you don't let your winners run. If all you do is scalp, I just doubt you're successful 75% of the time. And that if you are, you're still going to have to sit there 12 hours a day doing 20 or 30 or 40 trades a day, which I have done. But let me tell you, that's hard work. So I remember days and days. I remember one time I must have traded for 3 days straight. I hadn't even showered. I remember like slime forming all over my body. And finally I'm like, I need to shower, right? And I just hadn't slept. I'm jacked up on coffee and stuff. Anyway, so I remember showering. And I'm not trying to be rude here, but it is the truth. All of a sudden, on my tailbone, I had the worst pain, right? Because I had taken my shower and I cleaned myself up. Then I sat down on my chair again to do some more trading. I sat down and went like, oh, ah! And I had literally worn the skin off the tailbone. I wore the skin off my tailbone. They don't make Band-Aids for your butt, but I needed one. I couldn't sit down. I couldn't sit down. I was just like, oh my God. Oh. Right? And that's because I was doing things like scalping, just small trades and all that kind of stuff. But that's very difficult to do. You need to be very good at what you do. It takes so much time, so much effort, but so much spirit, so much stress. It's very stressful. You can start to get stomach problems and all this kind of stuff. And you know, like I said in previous conversations, it generates income, but not so much wealth, because you're getting paid to just, work like almost by the hour. And then you walk away and you're not making any money because your trades, you're not trading. So anyways, I think if you have a smaller trading account, what I would ask you to focus on is, like I say, every week, like if you were here and you placed a trade and you sat on it most of the week, you would have made this amount of money. I don't know how many losing trades a scalper would have had in that period. And then again, Sunday morning, here you are, right, Jimbo? Like, you don't need me to tell you that. If you're a bull, get to your chart Sunday morning. You're buying off the central pivot point. And what's your plan B? Your plan B is here. Like, you don't need me to tell you that. That's not what you need. You should know that already, and then you should do it. Most people are not there doing the work, and that's the problem, not the intellect. And that's why I'm here every day sharing this with you guys, right? So that we can improve your trading together, but you still need to be there and make the trades. By the way, I'm literally going to have a sugar low here. My face is going numb and my hands are going to start shaking. So I'm going to have to, it's a downside of diabetes. I apologize. I had an apple and stuff. It's just not doing it. So I must have taken too much insulin. So I apologize, guys. I'm going to have to cut a little bit early here. Although, to be fair, right? I only promise Traders Way 45 minutes a day, but I've been doing closer to an hour and a half for the last 5 years. So I do care about you guys. I do want you to succeed. Let me try to get that pound yen in, okay? But I got, Mike, I'm really starting to fade. I might have to go abruptly. So if I just say goodbye and leave, that's the issue. I'm going to need to put food in me. All right. Okay. All right. What do we want here? Somebody wanted to, okay. So what plan did I go over 2 or 3 times last week? Okay. Once again, okay. Here's your Sunday entry. Look at that. There's last week's target. Oh, I went a little higher. Oh, I'm sorry. Okay. You don't need me for that. You should know how to trade, and you should know to be there, and you should do the trade. I think you totally get that. You don't need me to be there and pull the trigger for you. And then the next thing is, now that it's made a higher high, here's your roll reversal. Oops, I want that to be the highlighter. But you can see I've already highlighted it for you. I've already set it all up in here. There's the higher high, higher low, off the bottom. Great. Okay. If you're a bull, that makes a ton of sense. Now, it doesn't have to stay bullish. It's just if you're a bull, that's very easy entry. Okay. And there's your target. Okay. Look, you're long off the central, off of a monthly pivot. This is your buy zone. I highlighted it for you days ago. Okay. You don't need me. I've already done the whole trade plan. Having me sit around and trade it for you is not helpful. But anyways, I really got to go. Like literally, my hands are going to start shaking. And that's bad. So if I did nothing, if I sat here for an hour, I'd probably die. Isn't that amazing? Like if I just sat here 1 hour, did not put sugar in my body, I'd probably go into coma. So I should probably go eat. Okay, but I hope that's helpful to the pound yen, the person that asked for the pound yen. Okay, and again, like to the person that asked for, stop placement, I think it was euro dollar. Again, you start on Sunday night, so 12 hours ago or whatever. Your stop would have been down here. You're now moving up. You're profitable. You can move it a little bit closer if you wanted. And then, of course, the target's here. We're off the central pivot. So you could probably go for R2 this week. Okay. That's right, Jimbo. Yeah, but I'm just going to have a healthy meal. I don't like the way I feel when I spike my sugar back up. It really messes up. I mean, I end up feeling bad all day. So, a sugar low with a sugar spike is bad. So I think I'll just have a sandwich. Okay. Okay. So thank you, guys. I do appreciate you. Okay. And it's true, going back to Jimbo's comment, it's true. I was laughing at the other group, I guess, because it seemed like it was packaged in such a way that you need them. I don't really care where you learn how to trade. I just want you to be successful. I hope you choose Traders Way as your broker, but I just want you to be successful. Yes, I do also offer training programs at FX Bootcamp, but they're legitimate, unfiltered, real-world advice learned by a trader that's self-taught. And it's not packaged up as a secret. I believe you will learn how to take care of yourself. And to me, that's the big difference, that you don't need to rely on me. I want you to succeed and be able to be a successful, independent trader that takes care of his family or takes care of her family, because you know how to make the decisions for yourself, and you don't even think about the secret sell zones only bankers know. Like, that's garbage. So That's that. So peace on earth. May the pips be with you. May our profits be above average. I will see you tomorrow. Thank you for being on my team. Cheers. Oh, there we go. See you tomorrow, guys. Thank you.